China has been able to successfully re-inflate the bubble in real estate prices. Chinese buyers have supported many real estate markets around the world, and these 4 charts will show you that this is also including their own. You came here for the truth, so let me unveil that for you. Today we will keep our focus on China, showing you a few charts as well as some very important information. So let's get right to it, beginning with this very important chart showing the China home price average month over month. And of course, this is a month over month change, and what we need to understand is that this can change tomorrow. You look at where this begins, essentially beginning of 2009, and the peak here is around 2009, 2010 actually, and then to current time. We're heading back into that territory for many things. A lot of times it's things getting worse, but you can look at this in 2 different ways. You can say that everything is normalizing because prices are increasing, or you can have it with a more realistic, more clear view of exactly what's happening, and that is in the next 2 charts. And beginning with this, broad credit growth versus land auction premium in tier 1 and tier 2 cities. All you need to know is that credit is growing. More people are borrowing. They are expanding how much debt they have on a personal level, the nation as well. Every country's doing this. It's not just the West. It's not just the US. Every country is following suit. Now, you look at this one. Share of mortgage in total new RMB loans. Massively in 2016, you can see what has happened. Now, I don't know if this has anything to do with what's happened in Vancouver or BC, in fact, and what may happen in Ontario as well. I don't know. If enacting these laws and the individuals are choosing to purchase homes in China instead of going and branching out. I don't know if it has that much of a big impact, but ultimately what we're seeing is in the very, very recent past, this past couple months, we have seen a big change happen. And you'll notice here that people are borrowing significantly. We can see that more mortgages than ever before, at least in this period of time. And it's probably going to have to expand because as conditions get tougher and tougher, people generally have less money. Less money, they need to borrow more, and they will do so as long as the banks are willing to give out money. They will borrow more, and ultimately, this is a bad case for the future. We know that. Look at the U.S. China interest rate. Ultimately, I want to show you that the interest rates in China, while they are higher than in many countries in the West, let's say the US, for example, look at it historically speaking, just over 4% is still relatively low. You can't think that a 4% interest rate is something that it needs to stay at. I mean, if you look at it historically, they've had higher interest rates. Many countries, in fact, use higher interest rates regularly. They need that. And it also, at the same time, promotes savings because people can put their money in the banking system and get that trickle effect with their savings accounts. I'm not necessarily suggesting you do that. I'm just saying that's what people can do. But of course, when you drop the interest rates down to 0 or perhaps negative, you force people to take that money and buy big ticket items, put it into stocks, put it into anything, and as a result, lose it all. Just flush it down the toilet, probably have some more fun, record a YouTube video, post it online, probably get 1 million views. The succession quandary. This is just so good. If you've tuned in this far, you'll enjoy this. The succession quandary is shaping up as a defining test of the power of the ambition of this individual, the president here, and China's most dominant leader in decades. When and how his heir is chosen and who is picked will offer a measure of how much further he can bend the party's ideas and collective rule that evolved after the upheaval of Mao Zedong's last year. what they're just talking about here, through all this jargon, the guy doesn't want to leave his post. You have the, it's funny because that's called a dictator. And essentially what they're saying is that he will stay in power for the time being until they could find a good replacement. Now, I don't think it works like that. You can't just extend your own stay. Look, if you want to call yourself a dictator, just do so. Just tell everybody to butt out. You're a dictator and nobody's coming in your way. But if you try to make yourself seem like it's an open market, like everything's just fine and happy and dandy, North Korea style, then you can go and do that. But the people are getting a little bit, swindled by exactly what's happening. Say, oh, it's a wonderful place. It's a wonderful place. But you got to look at the truth, the reality. Let us not forget history. We need to remind ourselves of that all the time. All the time. And it's, there's more in here. Basically, he's a dictator. He wants to continue to be a dictator. Doesn't want to leave his post. End of story. Next article. China's richest man, basically moving on Hollywood, purchasing all kinds of things, offering a $1 billion for Dick Clark Productions, going into cinemas, theme parks, and everything else, buying it all up. The Chinese are certainly moving in, not just on real estate, but on the, residential real estate, but you can also see that on commercial real estate. You can see that on businesses, on land, corporations, everything along the line. And this ultimately really gives you a view of what the future may look like. If you found this video informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my book, The Money GPS, even more informative. You can look through the book. Head over to Amazon. They have a look inside feature that's going to allow you to flip through the pages of the book and see if you like it. Take care.